Playing around with crypto? Be careful. As a business accountant, my team and I spend all day long helping business owners on their journey. And of course, look, it's nearly 2022. One of the things we must get involved with and do quite frequently is tax on cryptocurrency. So we're talking about, your Bitcoins, your Ethereum, that we'll probably do another video on NFTs if you come across those. That's quite big as well. So, but in this particular one, I just want to highlight some real key tax issues to watch out for if you're dealing with crypto. Now, before we get into it, if you like these type of videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more videos just like this one. So let's talk crypto then. What do you need to know? And I'm going to keep it relatively short. It's just really important to understand that crypto, firstly, yes, there are tax implications. It's a very common question we get asked all the time. I see it all over the web. People are like, I'm just doing a bit of crypto on the side. Like, it's no big deal. Like, there's no tax consequence to it. Now, part of the reason that prompted this video, apart from all these conversations, is that Revenue and Customs, so the people that collect the tax, have written to a lot of general public in the last couple of weeks saying, just to let you know, we've had some information from one of these crypto sort of marketplaces, and we know you've been dealing with crypto, just a reminder type thing, we think you might need to do a tax return. So they've got a lot of data. So if you have been dealing with crypto and haven't done anything about it for tax purposes, I think you really need to start thinking about that now, because anything with Revenue and Customs, if they come to you knowing there's a mistake and they force that inquiry, there are very, very hefty penalties for them doing that. So you want to be upfront, and it's not a massively onerous task to go to them and say, I've got something to tell you about. Like, they're pretty reasonable people about it. It's not too bad a process, and if you need help, obviously there are accountants out there. So that's the first one to know, is that it is subject to tax. Now, normally it's subject to something called capital gains tax. You'll often see that referred to in writing as CGT, but capital gains tax. And that's the kind of tax when you invest in something and then sell it. So if you invest in a buy-to-let property or some shares, and then you sell those things at a profit, normally you'll pay capital gains tax. Now, that's quite a nice tax because you get a separate personal allowance. So as an individual in the UK, you normally get around 12.5 grand a year, depending on when you're watching this video, of income you can earn tax-free. And then you get a separate capital gains allowance. It says you can have another sort of 12 and a bit grand's worth of profit from selling stuff like that without paying any tax either. So if you're dabbling on a little bit of crypto, just investing, and then you might have sold it later in the year, something like that, you're going to generally be taxed under capital gains. And if you're only making 12 odd grand in a tax year, then you're not likely to pay any tax anyway. But depending on the amounts you sell and the quantities you sell and things, you're still likely to have to report this on a tax return. So that'd be one of the action points of this, is if you have been selling it, you're probably likely to need to declare it to the revenue. There are some limits and things. I'm not going to go too deep into it. It's just being wary of it. I'm sure if you check out gov.uk, you can find out the particulars of when you should declare it or not. But I just want to put that seed in your head that if you are selling it, it's likely you're going to need to do one. So they are subject to these capital gains. Now you think, that's all right. Well, I'm only buying Bitcoin and then trading it in for some Ethereum or something like that. Or, any of these other coins that are out. There's tons of them now these days. The thing is, when you trade one coin for another, what you're actually doing is disposing, as it's known, disposing of your Bitcoin, for example, and buying another. And when you dispose of it, if you've made a profit from the time you bought it to the time you disposed of it, there's going to be potential capital gains tax consequences. So you've got to keep fantastic records of when you do that. A lot of the marketplaces are now catching up on this. We're seeing it with clients' records. Going back a year ago, there's just horrendous spreadsheets that we have to trawl through, because without getting too deep into it in this video, there's some really complicated ways of calculating tax when you do sell these things, because there are rules that say, if you buy it in a certain amount if you sell it and you buy something else in a certain amount of time, there's like this matching rule and all these things. And depending on what you bought when, it really matters. So keep really good detailed records. Simple spreadsheet will do, but as long as you've got all the dates, transactions. Where it gets complicated, of course, is if you're buying it in different currencies. If it's values in dollars, what's the value in British pounds? That can be quite a pain. And a lot of these marketplaces are now doing brilliant reports where they can give you these reports so you can see. I've seen a couple recently this week that are really nice as well. So, and there are apps that are being developed, and I'm sure at some stage we'll probably do a review of some of the apps that are out there as well. But do know you do need amazingly good records to do it, because if you have got tax to pay, you're going to need to know how to calculate it. And actually, the capital gains rules are a lot more complex than just normal income tax sometimes, just because you think if you do, you're a taxi driver, you know what your income is, you know what your outgoings are. There's a massive piece of skill around making sure that you've got the right amount of expenses and the right amount of income in the boxes. But filling out the tax return is relatively straightforward on like a practical level. However, with a capital gains tax return, you have to do these calculations to kind of know what to put in the boxes, and that can be very difficult with poor records, as we've certainly found out through the time working with clients with this, and they're very wide and varied. Now, also the other thing that's worth bearing in mind is you could actually make a loss, and making a loss, you can normally bring that forward and use it later when you do sell at a profit. So even if you're not making a profit, you're actually selling at a loss, it can still be worth doing a tax return just to log those capital losses. So if you're still dabbling and you think you might make a profit later, you can use those and carry those forward. Now, the other circumstances where you've got to be wary of this is when you buy something. So it's not very mainstream at the moment, but there are places where you can buy stuff with your Bitcoins, for example. So you go in, let's say you go and buy, it'd be stupid, but let's just say you bought a cup of tea with your Bitcoin. You've disposed of that Bitcoin. If there's been a profit since you bought it and since you sold it and used it for goods, then you're also likely to pay capital gains tax. So you do have to be very, very careful. Now, there are other circumstances where you won't pay capital gains tax. You might pay income tax. And because it's so complex, I'm not going to go too deep into it. But let's just say if you're mining, for example, if you're crypto mining, you'll know what this is if you're doing it. That's likely to be kind of trading income and be subject to normal income taxes. The same as if you were really like turning over loads and loads and it was a trade for you, changing all these coins. But I think you have to be in a really high volume place for that to count. But just do know there are circumstances where you could be classed not as kind of capital gains tax as income tax as well. So be wary of that. And if you are doing high volumes of it, it's worth talking to a professional about how that might be treated, especially if you've got quite a lot of mining income. And they're the main tax issues you need to know. So quick recap before you go. Just remember, if you do have crypto, keep really good records. If you are exchanging them, selling them, anything like that, you're going to need to think about whether you need to do a tax return. And also remember, HMRC have now got a lot of data on this. So if you are doing it and thinking you're going under the radar, it's very unlikely that's going to be the case for very long. So there we go. That's it. A couple of really key points on crypto. Please do share this with people that you think need to know this info, and I'll see you in the next one.